is Robert Maltbie with Millennium Asset Management at the historic Fort William Henry battleground site. This was the site of a big skirmish between the French, the Indians, the Brits, and the U.S. in 1755. It was instrumental in founding of our country. We had the Fort William Henry Massacre, a real battleground, and we had the British get so upset about that massacre that they came in and just rooted all the French out of the country. 20 years later, the U.S. rooted the Brits predominantly out of the country, and that was the founding of the United States of America. Very significant. Right now we have a market that hopefully isn't routing you out of the market. It's a lot of volatility and a real battleground here. Let's look at our market indicators. For October 27, our theme is earnings resilience amid a soft landing. We have things slowing down a little bit, employment, and yes, overall maybe earnings momentum. The market continues to digest a strong Q3 earnings season with roughly 76% of the S&P beating the estimates. This is very good. The market sentiment remains neutral. It's in a position where the bears and the bulls are at about lockstep, kind of like on the battlefield. The technicals are very positive. Each major indices is up in above the 200-day moving average. Liquidity is positive. Money market assets are over 6.7 trillion, and that is over 11% of the total market cap, providing a bullish buffer to the downside. Valuation is the controversial part of the analysis here. The S&P trades 23 times our forward estimate for next year of $320. We feel it should get a higher multiple because of the higher earnings growth for a longer period driven by technology and this AI boom. We put a 25 on it for the next couple of years. So that gives us a target of 8,000 next year. That's a plus 16% total return. Pretty attractive. Now, the monetary indicators. M2 growth is increasing. That's bullish. Up 4.3%. Velocity also picking up, increasing. The yield curve is starting to broaden and look like it is a normal bullish yield curve. So the factors are shaping up, and we have a 99%, according to the futures market, probability of an interest rate cut in a couple of days. Now, speaking of battles and takeovers, we have a special situation. The name of the company is Warner Brothers Discovery, symbol WBD. It is in play. Yes, it owns CNN. Current price about 21. Our 12-month fair value target 25. Upside about 20%. Here's the situation. A little bit about the company. They're one of the most compelling special situations in global media. Following their post-merger restructuring, the company has entered a value unlock phase driven by deleveraging, cost control, and pending corporate split into two independent entities next year. These are powerful, well-known franchises, DC Comics, HBO, CNN, Looney Tunes, that generate strong free cash flow. They're undervalued because of their relative performance, mainly with CNN. There are recent rumors regarding takeovers of this company and a recent bid providing a floor of 20. The revenue and the valuation places it at a discount to its peers. Management is focused on deleveraging, disciplined content investment, and cost synergies to get exceeding 1.3 billion in cuts. Key points here: undervalued, in play, lots of room for upside. And at $21, we feel it is ripe for the taking, like Fort William Henry. This is Robert Maltbie. Visit singularresearch.com for a trial subscription to our research to participate in what we think will be quite a market in the next 12 months. Thank you very much. Have a great day.